So I got this question a lot. When I say a lot, I mean a lot, a lot. Many of the subscribers here or people on TikTok or other social media platforms are down big time on crypto, right? They're down over 100K, some people. And they ask me about, what the heck they have to do? What's the solution, right? Is the is the bull market coming up around the corner? And most people actually, they want to focus on altcoins. They don't ask about Bitcoin or Ethereum. And they ask about, way out of how they actually offset, how they can use the loss that is currently unrealized. They haven't sold yet, but they're down over 100K. So they try to, find a solution. Listen, you're not in the worst position possible. Here's why. If you are sitting on 100K, more or less, in unrealized loss on your crypto portfolio, you can use this unrealized loss, but you cannot use it for absolutely everything. You can use it if, for example, you build a startup, you sell a company, you sell a business. If you have any of those, for example, you build an app, you sell the app for $50 million, right? Very important. The app should be structured under C Corporation. Why under C Corporation? Because C Corporation will allow you to be distributed through the equity ownership. Meta comes, buys your app, you sell the app, you sell the equity that you have as an owner in the app. Meta buys the equity, pays you $50 million for the equity. Then what happens? You deduct the $10,000 which you initially purchased your equity as an owner in, right? You deduct this one, and then you are going to be able to offset your capital loss on the crypto portfolio. Instead of paying taxes on $49.9 million, you're actually going to be able to reduce your disparate personal income with additional 100,000, 50,000, 80,000, whatever your current capital loss on your portfolio is. Remember, this has to be a realized loss. Then you have to effectively make a decision. You have to consult with tax attorney. You have to consult with your accountant. Every situation is different. I'm just giving you an example. This is figuratively ain't gonna work for every single one of you. But you can use this, 50, 60, 80, $100,000 loss, and you can offset majority of your sales. That's very easy, as long as you have the criteria. Some people actually, I've said in different videos, they have investment portfolio of real estate. This is tricky by state, different regulations, but keep this in mind. Do your research on this domain as well. You can actually offset some of the rental income, especially if you have a license. You can offset some of this as well. But tax accountant should definitely look into this, because remember, each by state basis will count or not count this particular amendment. But this is something to think about. This is food thought that you can explore, you understand. So, being down 50, 60, 100K on crypto sucks. And a lot of people, kept asking me the same question. What the hell do they have to do? Should they take the loss? They wait? I don't know. The whole situation is pretty messed up, because if before he only looked into the crypto 4-year cycle, the 4-year cycle died when Bitcoin actually broke the 100K. So the 4-year cycle is completely dead, and he couldn't really relate to. This is why now you have also the Clarity Act, which is postponed to be voted. I think September, October. I actually look at the dates, but you have so many different micro factors that impact the overall move. As you can see, even MicroStrategy has changed the system, right? They don't really buy on every dip, but they kind of try to sell little by little, which is pretty annoying, considering that they have been just telling you to buy, never sell. I understand that they structured the new financial, debt instrument, that they have to finance most of the dividends, but that's not really an excuse. Remember what they keep saying, they should buy. And if you look at for the last 6 months, they sold around 5,000 Bitcoins, which is complete nonsense. That's completely opposite of what they actually promise and talk about and vouch for, which is not something that, anyone could tolerate. Anyway, so again, let me repeat and summarize what's the most important parts of this video so you can actually take some value. Sitting on gigantic loss, not only on crypto, but on the stock market, can help you offset a big chunk of your income. You might sell business, you might sell real estate. Again, consult in depth with tax attorney, consult depth with your accountant, because they will know exactly your situation. I'm just giving you, exploration thoughts. So sitting on gigantic loss is actually a very good lever that you can sit and wait. Because remember, if now you try to sell this, you will have you have 30 years in advance to drag your tax write-off, because the government allows you to, write off $3,000 in capital loss per year. So if a lot of you think over $9,000, you have to wait 30 years to write off. So that's complete nonsense. 30 years is a long fucking time. So, I want you to think about this. Think about the way how this could actually work for you. Maybe you have a family business. Maybe you're looking to sell the family business. Maybe you have a family house. Maybe your tax attorney can and will be able to structure some of the proceeds to be, reduced by, this capital loss. But remember, very important element. Because you have loss in investment capital, right, which could be stocks, could be a crypto, the easiest way to actually get the IRS to approve this particular loss and reduce your income is to sell something that is also equity. This is why I said the C corporation, the formation of C corporation is very important, because then you actually swap equity for equity, and you will be able, easily point blank to show and highlight that, what, I saw this equity over here in this company, I make money, but on the other equity I lost 100K. So basically, to offset one the other is very obvious. It's basically, it's very hard for them to make it the case that you're not eligible to take this or to offset particular income. Again, I'm not a tax attorney. I'm going to keep repeating this because a lot of people might say that this is the situation that will work universally for every single one of you. No, it's not going to work for every single one of you. Again, you see particular laws that are in place in your destination. Also, your business is different. And also remember, the equity swap is very, very important. The actual structure between both is very, very important. It's not the same. So if you can structure to get paid in equity and swap the lost equity, it will be probably the best thing you can do. The least red flags and also easier. Hey, I lost $100,000 holding these stocks or this crypto, which is calculated as a stock ownership, regardless crypto or stocks. If you look at tax forms. And then if you sell a business which was structured as a stock or equity, you still get paid in stock and equity. So it's very easy to offset the proceeds from one stock or equity and reduce, your proceeds by swapping some of the losses again in tax and equity, which could be coded almost the same way. Again, don't quote me on this, but if the codes of both transactions are the same, you can offset them, and it will be, I assume, easy for your tax attorney to actually figure this out. Cheers.